Imagine waking up tomorrow to find your bank account frozen, your savings wiped out, and the dollar in free fall. As the global financial system teeters on the brink, major banks are collapsing under the weight of their own debts, and the dollar's value is plummeting faster than anyone predicted. But what if I told you there's a way to safeguard your wealth, even as everything around you crumbles? Today, we're diving into why silver might be the only thing standing between you and financial ruin. Stay with us because by the end of this video, you'll understand why silver isn't just an investment. It's your lifeline. Over the past few years, we've witnessed alarming signs that our traditional banking system is far more fragile than most people realize. Major financial institutions, once considered too big to fail, are now grappling with unprecedented levels of bad debt and risky investments that threaten their very existence. Economic slowdowns across the globe have exposed the shaky foundations these banks are built upon, revealing a system propped up by endless cycles of government bailouts and money printing. Financial expert Alastair MacLeod warns that this isn't just a temporary slump or a routine market correction. He points out that the reckless lending practices and over-leveraged positions of these banks have created a ticking time bomb. The reliance on complex financial instruments and derivatives has only compounded the risk, making the entire system exceedingly vulnerable to shocks. We've already seen cracks starting to form. Banks struggling to maintain liquidity, increasing defaults on loans, and growing distrust among investors. Governments and central banks attempt to patch these holes by injecting more money into the system, but this is merely a band-aid solution that fails to address the underlying issues. In fact, these measures often exacerbate the problem by devaluing currencies and eroding public confidence. The domino effect of a major bank failure could be catastrophic, leading to frozen assets, inaccessible funds, and a complete breakdown of the financial services we rely on daily. Imagine not being able to withdraw your own money or make essential transactions because the institutions meant to safeguard your assets have collapsed under their own weight. Alastair MacLeod emphasizes that we're approaching a critical juncture. The combination of unchecked debt accumulation, poor regulatory oversight, and global economic pressures is creating a perfect storm. Without significant structural reforms, which seem increasingly unlikely, the question isn't if the banking system will fail, but when. And when that happens, the consequences will ripple through every aspect of our lives, impacting everything from our savings and investments to our jobs and daily expenses.
I mean, it's actually as simple as that. But returning to the debt problem, this means that the debt is going to grow to the point where it just basically becomes impossible to fund. And the only way in which it can be funded is for interest rates to rise substantially, and at the same time for the government to cut its spending and to ensure that its budget is in balance. Now, here we are ahead of a presidential election in the presidential election year, and there's absolutely no hope of that. That is for sure. There's probably very little hope of it if what the two main contenders say about their policies come about. There's absolutely no hope of this happening in the next year or two. On top of that, you've got the problem that, for example, the SARM rule, which is based on the level of unemployment, when that rises to the point where it's exceeding the 3 month, 3 year moving average, however it's constructed, has been a very reliable indicator of a recession. And this is part of the reason why Jay Powell is now looking to manage the economy rather than managing inflation, because the threat is that the economy will go into recession. The problem here is that when you get an economy running into recession, Keynesian economics says that government's got to step in and increase the deficit in order to support the economy. Yeah, but they're already at 130% to GDP, and the foreigners are already backing off buying more debt. So this is a real crisis. And it's just amazing that so few people seem to, and particularly the politicians, seem to have absolutely no idea that this is a problem. And markets continue blithely along in their own course without even thinking about this. I mean, the dollar has been the world's reserve currency for so long, the assumption in America is everybody needs the dollar. They will keep on buying the dollar. They must keep on buying the dollar because they need it for trade. They need it to go and buy commodities, whatever. But actually, if you look at what's happening, the world is moving away from the dollar. And the people in America are the last to understand this. And I have to say that whenever you get a currency crisis, it is always the foreigners first who actually understand what's going on, because they don't need to hold a foreign currency. They will be the first to sell it. And then at some later stage, the domestic users of the currency begin to realize that it's the currency going down, not prices rising. And that brings me on to another element of this, and that is inflation. The idea of inflation, as put about by the establishment and by the press, is rising prices, which can be controlled. I mean, the latest one is, Ms. Harris saying that, price gouging and all the rest of it, and we will stop it. So we'll do what Diocletian did. Not that she's ever heard of Diocletian, I'm sure. And then,
as the cracks in the banking system widen, the U.S. dollar, once the bedrock of global financial stability, is facing its own existential crisis. For decades, the dollar has been the world's reserve currency, trusted and used by nations across the globe. But today, that trust is rapidly eroding, and the signs of the dollar's decline are becoming impossible to ignore. Alastair MacLeod argues that the U.S. government's unsustainable debt levels and relentless money printing are key drivers behind the dollar's weakening. The national debt has ballooned to unprecedented levels, now exceeding 130% of GDP, a figure that dwarfs even the debt levels during World War II. This staggering debt burden is forcing the government to continuously print more money, diluting the value of the dollar and undermining global confidence in the currency. Foreign investors who once eagerly bought U.S. Treasury bonds are now pulling back. Countries like China and Japan, historically among the largest holders of U.S. debt, are quietly reducing their exposure. This shift is alarming because it signals a loss of faith in the U.S. government's ability to manage its finances and repay its obligations. As these foreign investors retreat, the government is left with fewer options to finance its debt, which could trigger even more aggressive money printing, a vicious cycle that further devalues the dollar. But it's not just foreign governments and investors losing faith in the dollar. Domestically, Americans are feeling the pinch as the dollar's purchasing power continues to decline. What used to cost $1 now costs significantly more, and this inflationary pressure is hitting the middle and lower classes the hardest. Savings accounts that once offered security are now losing value in real terms as the interest earned fails to keep up with rising prices. The dollar's decline is also evident in the global shift away from dollar-denominated trade. More and more countries are striking deals to trade in other currencies, bypassing the dollar altogether. This trend, if it continues, could lead to the dollar losing its status as the world's reserve currency, a catastrophic outcome for the U.S. economy. Alastair MacLeod points out that this scenario is not just a distant possibility. It's already beginning to unfold. The warning signs are clear. The dollar is on a downward trajectory, and without a dramatic course correction, it could soon reach a point of no return. As the dollar weakens, so too does the financial security of anyone relying on it. This is why understanding the risks to the dollar and exploring alternatives like silver has never been more critical. In a world where financial institutions are crumbling and the dollar is losing its grip on global dominance, finding a secure way to protect your wealth has never been more urgent. This is where silver comes into play. Unlike paper currencies and digital assets, silver has stood the test of time as a reliable store of value, especially during periods of economic turmoil. Alastair MacLeod argues that silver is not just another commodity. It's a lifeline in times of financial uncertainty. Historically, silver has performed exceptionally well during crises. When trust in the banking system erodes and currencies collapse, silver remains a tangible asset that holds its value. In fact, during past financial meltdowns, silver prices have surged as investors flock to safe haven assets. But what makes silver so uniquely powerful in today's context? First, silver is more than just a precious metal. It's also an industrial metal with a wide range of applications in technology, electronics, and even healthcare. This dual demand, both as a safe haven investment and as a critical industrial resource, creates a robust market for silver that is less susceptible to the volatility seen in other assets. Moreover, the supply of silver is relatively constrained. Unlike fiat currencies, which can be printed in unlimited quantities, the supply of silver is finite and largely determined by mining output. As demand for silver continues to grow, driven by both investors seeking safety and industries needing silver for production, the price is likely to rise, making it an even more attractive investment. McLeod emphasizes that while gold often steals the spotlight as a go safe haven, silver offers several advantages that shouldn't be overlooked. It's more accessible to average investors due to its lower price point, allowing for more significant physical ownership. Additionally, silver's historical price movements show that it often outperforms gold in bull markets, meaning the potential for returns can be even greater. But beyond the numbers and historical trends, the most compelling reason to consider silver is its role as a hedge against the very collapse that seems increasingly inevitable. When the dollar continues to devalue and banks begin to fail, silver provides a form of wealth that exists outside the traditional financial system. It doesn't rely on the solvency of a bank or the stability of a government. Its value is intrinsic and recognized globally. Investing in silver is more than just a financial decision. It's a form of insurance. It's about preserving your wealth in a form that has consistently proven its worth throughout history. As the risks to our financial system grow, the case for silver becomes not just compelling but essential.
The most it ever got up to was 119%. In other words, the debt today is greater than it was with the war economy in 1946. Now, that is extremely important. The reason it's a debt trap occurs when the growth in your income, and it doesn't matter whether it's a government or individuals or a company, when the growth of income is less than the growth of debt. And obviously, the growth of debt includes the interest which is being rolled up. Now, that is now the situation again. We had this during the great financial crisis, when Lehman went bust. We had it in COVID, obviously. And we were just sort of getting our heads above water, or at least America was getting its head above water in terms of the debt trap, before we then started going down into that situation where income was not exceeding, if you like, the growth in debt. The growth in income was not exceeding the growth in debt. So, and the reason for that basically is you've got a slowdown in the US economy. You've also got inflation. And one way or another, the foreigners aren't really buying your debt. I mean, we've got China is not buying for her reasons, and nor is Japan. So the foreign involvement in acquiring debt, while since, I suppose, the Lehman crisis, their holdings in US treasuries have doubled. In fact, the percentage of publicly held debt in foreign ownership has actually fallen from just under 50% to just under 30%. So they're just not participating in the growth of your debt. Now, we're now talking about a situation where foreigners are going to get less, if you like, in return for lending money to the US government because interest rates will be lowered. And this was clearly signaled at Jackson Hole by Jay Powell. And I think that is a huge, huge mistake. And already we can see the effect on the dollar. The dollar has entered on a chart, something called the death cross, where the price is below the 55-day moving average, and the 55-day moving average has crossed below the 250-day moving average. All these, the price and average is all declining. That is a death cross. It's a very, very bearish signal. And you can understand why. And so, the other side of it, of course, is gold. And this is why gold is going so well. Under the gold price, you have a golden cross, which is the reverse of the death cross. So, you sell dollars, buy gold.
As we've explored today, the signs of an impending financial crisis are unmistakable. Major banks are on the brink. The dollar is in decline, and traditional safe havens are becoming less reliable by the day. But there's a way to not only protect your wealth, but potentially even grow it during these turbulent times: investing in silver. Alastair MacLeod's analysis leaves us with a clear and urgent strategy. First and foremost, consider reallocating a portion of your savings into physical silver. Unlike stocks, bonds, or even cash, silver has intrinsic value that isn't tied to the whims of central banks or the health of the financial system. By holding silver, you're essentially hedging against the collapse of paper assets and fiat currencies. Next, look at diversifying how you invest in silver. Physical silver is essential for long-term security, but you might also consider silver ETF or mining stocks as part of a broader strategy. These can provide additional exposure to the rising silver market, potentially amplifying your returns while maintaining a core of physical silver for safety. Timing is crucial. As MacLeod highlights, the window to act may be closing faster than we think. With every passing day, the dollar weakens, and the risk of bank failures grows. The time to buy silver is now, before the market fully prices in these risks. Once a major financial shock occurs, silver prices could spike, making it much more expensive to acquire. But this strategy isn't just about protecting yourself from loss. It's about positioning yourself for potential gains. History has shown that during periods of severe economic distress, silver doesn't just hold its value. It often surges in price as investors seek refuge. By acting now, you could be setting yourself up not just to survive the collapse, but to emerge from it in a stronger financial position. However, it's important to remember that investing in silver, like any investment, carries risks. Market fluctuations can be unpredictable, and there's no guarantee of returns. This is not financial or investment advice, but rather a discussion of the potential benefits and risks based on historical data and expert analysis. You should consider your own financial situation and perhaps consult with a financial advisor before making any investment decisions. In closing, the choice before us is clear. We can either watch as our wealth erodes with the dollar in the banks, or we can take proactive steps to secure our financial future. Silver offers a tangible, time-tested way to do just that. Don't wait until it's too late. Take action now, and ensure that your wealth is protected no matter what the future holds. And if you found this information valuable, be sure to subscribe to our channel for more insights and strategies to help you navigate these uncertain times.